spotlight on the apparel sector. CRISIL reports do suggest that India's organized retail sector is expected to record a near 8 to 10% revenue growth this financial year, riding on the festive season demand and increasing preference for fast fashion. You and I know that. We've seen that in the numbers of companies that operate in the fast fashion as well, for the first quarter at least. The reports also say that retailers are a little cautious on opening new stores. So to discuss this and more, we have Anuj Sethi, who's the Senior Director at CRISIL itself. Anuj, thanks a lot for joining in. 8 to 10% growth this year on the back of a good festive season is still lower than the compounded growth that the sector has been reporting between, say, FY18 to FY23 itself. I wanted two data points from you. One, in the first half so far, basis your conversations with the companies, what has the growth been? And what is it that you're anticipating in the second half? And how does the second half in particular compare with all the other years in the previous times that the companies have reported numbers? Only to understand if the growth is back-ended or there could be weakness in the festive season as well.
Sure. Good afternoon. We are anticipating 8 to 10% growth this fiscal, but it is almost similar to what we saw last year. Of course, it is lower than the 5-year average, but that included a couple of years, post the pandemic when growth rebounded very strongly. So that number has got skewed up a bit because of that. Having said that, the first half this fiscal has been somewhat subdued. We are still waiting for numbers, but what was evident in the first quarter was that growth was somewhat muted, lower than the actual number we have put out for the full year. But there are some positives we are looking forward, in the second half, which will drive demand. Besides, of course, the two reasons you mentioned, the festive and wedding season. Number of wedding dates in the second half is much more than in the first half. This was the reverse last year. Secondly, we've had a normal to above average monsoon so far this year, which augurs well for rural and the demand from the Tier 3, Tier 4 cities. Third, inflation is under control, which means your cotton prices also have corrected, which means the garments can be more affordable this year. So there are these positives, which we believe will, lead to better demand in the second half of this fiscal. Coming back to your the second part of your question, how is it different from earlier years? Last year we had demand very strong in the first half, and then it started petering out, the second half. This year it's the other way around. And these keep changing, post-pandemic, because post-pandemic growth was in excess of 20%.
Okay, so what is a sustainable growth rate you expect, Anuj?
Yeah, on a steady-state basis, about 10% is what we expect should be a sustainable growth rate, because the base also has been increasing over the years. We are almost at 2.2, 2.3 lakh crore now.
Okay. So, the other thing that stands out in your report is that retailers are now getting a little cautious on opening new stores. Instead, they are looking at efficiencies in their existing stores itself. How much could these efficiencies aid their margins by? Last year, it was 7%. And as a result of which, on the profitability front, what's the kind of growth that you are expecting? How does that compare with the 5-year average?
Right. We are expecting a slight improvement this year to about 7.2 to 7.4% from about 7% in terms of the EBITDA margins of last year. That's definitely a good improvement coming along with the revenue growth. But having said that, it's still at least about 150 bips lower than the trends what we have seen, a long-term average what we have seen. A couple of reasons for that is that some amount of discounting and write-offs continued in the first quarter as well of this fiscal. Last year, that's what impacted the margins. A lot of write-offs had happened because of stocks being carried over suddenly, and cotton prices also corrected. So those write-offs happened, which continued a bit in this quarter. But I think by and large, we are seeing the end of that, and henceforth we should see the demand with the demand improving, the profitability improving. The discounting also should come down gradually as the year progresses.
So what's the profit growth estimate that you have for this year?
It's
margins improved by
7.2 to 7.4.
That's the margin, right? So 20 to 40 basis points margin improvement, 8 to 10% revenue growth. How much does the profit grow by?
profit should grow by at least 10 to 15% over last fiscal.
Okay, so profit should grow by around 10 to 15% over the last fiscal. Just wanted to understand that why are retailers cautious on opening new stores, according to you?
Yeah. See, what is this is also linked to what has been happening in the last couple of years. It's the value fashion segment, which today contributes about 60% of the overall 2.3 lakh crore size of the overall apparel segment, which is growing, in double digits. And here we require stores which are, lower in size compared to, say, in Tier 1 and metro cities. And the fact that these are being set up more in the Tier 3, Tier 4, as well as even in the rural areas, and to some extent in Tier 3 cities. So the spend is not that much what we require in the for the larger stores in the metros. Plus the store sizes also are much smaller. These are largely standalone stores also. So that is one reason. So overall, we expect about 38 to 40% reduction in the area under addition, which will come this year compared to last year.
How much would that be according to you? And what's the average addition that we've seen over the last 5 years?
So last year we saw about 3.6 million square feet being added. This year we're expecting about 2.2 million square feet to be added.
Okay. Just wanted to understand, if you have to just compare apples to apples, Anuj, I know that, the wedding season would be in the second half and you don't have that data as of now. But if you had to compare apples to apples in terms of, what we saw last year in terms of growth in the festive season and the wedding season and what you are estimating now, what are the key differences and challenges and maybe the growth parameters?
Yeah, see, typically 35 to 40% of the demand for apparel comes in the wedding season, the festive and wedding season, that is the Shara Diwali and up to November. December becomes a bit slack in terms of demand. And then in January, you have your EOSS part 2 starting in the year. So that's how it is. It's very similar to what's happening every year. It's only that, see, the number of where the wedding, the dates come, I think that makes some amount of difference, especially on the premium segment. And also on the some segments like, ethnic clothing, I think those are heavily dependent on the wedding and festive season. So shifting of dates, from one quarter to other definitely makes some difference. That we are seeing very evident this year.
Right. Just finally, before we let you go, if you could leave us with two specific trends. One is that, we've seen a big surge in the way Zudio has grown. Whether that continues, what's the expectation for this year on that one? And secondly, online, we've seen a lot of, sales, fast fashion sales shift online as well. If you could give us a sense of how much online is as a proportion of this fast fashion and at what rate is that growing? Because that could also explain the lower store footprint addition.
Sure. So, while I did not comment on company specifics, but fast fashion is gaining popularity due to better affordability, attractive offers, fast sharing trendier styles, and also preference of branded clothes. And all of this is, made possible by fast fashion. Roughly 20-25% of the fast fashion sales is happening online. There are a number of players who have come, plus existing players also have, increased their reach through the online channels. I think that definitely has helped. So this segment is seeing strong growth, but these are also at the garments also at much lower price points. So the profitability is to some extent because you need to keep pushing. And here also some discounting is offered. The margins here also are pretty similar to overall what we see in the apparel industry.
Okay. All right, Anuj, we're going to let you go on that note. Thanks very much for joining in and speaking with us. So that's the view coming in on the entire apparel sector and the kind of growth that we could probably see in the second half. We would probably see growth picking up. Well, for the markets, the Nifty